I want to welcome you to the video for the statement of cash flows. There's two methods of doing it, the direct method and the indirect method, and we're going to do both of them. This video is going to concentrate on the direct method. Next video we'll do the indirect method, and then for the operating activities. And then the last video that we have that I'll be doing will be doing the investing and financing activities, because they're done the same no matter which method you actually use. So the first one we're going to do is the direct method. And I will tell you that if you're given information in this format here, you need to take that format and then convert it into the income statement and a balance sheet, because that's where we get the information from. Okay, for the direct method, and we'll fill out the statement of cash flows as we go through. But for the direct method, we start with total revenue. Okay, now this is for the cash collected from customers and payables and that type of thing for the operating activities. So the main thing we focus on here is the income statement and the current operating assets and the current operating liabilities. Okay, so we start with total revenue, which is $177,400. And then what I like to do is I put in OK here, so that way I know I have that one's taken care of. That's the only reason why I put the OK. You can also use check marks or anything, X's, whatever you want to do. But the revenue then goes to the accounts receivables. Okay, so we have $22,000 and $24,500. So we put in $22,000 and $24,500, and we take the difference is $2,500. Well, since receivables went up, we want to subtract off the $2,500 because that means we did not collect it. And then down here, I'll put the OK in for the accounts receivables because that's taken care of. Okay, then here we'll simply add these together for the cash collected from sales. But then we have unearned revenue that also affects cash that we want collected from customers. So we come down to the unearned revenue section, and we see that is $1,600 and $1,800. So we have $1,600 and $1,800, a difference of $200. And that's added because that's collected from customers. They paid us ahead of time, so that's $175,100 then. Okay, that's kind of weird. Did you increase cash or decrease cash? Well, on the first one we decreased the cash because accounts receivables went up. Second one we increased it because that's a liability. We received more cash, and that's why we added it. So in the statement of cash flows then, in cash collected from customers, we would have $175,100. Okay, and then in here for the unearned revenue, I would put an OK there because that one is taken care of. Next section we have is a payment for merchandise. Well, that comes from the cost of goods sold. So that's $85,560, which is right there. And then cost of goods sold comes from inventory. Well, inventory has a beginning of $30,000 and an ending of $40,000. So that's right here. So that one's okay now. Difference of $10,000. Again, this time I'm looking for how much did we pay. So this is added because we bought more inventory than what we sold. So that would be $95,560 so far, but purchases will go through accounts payable. And accounts payable went from $6,500 to $7,500. So it's $6,500 to $7,500, difference of $1,000. Well, that's going to be subtracted because we did not pay it, because payables went up because we didn't pay. So $94,560 would be our payment. And then in the accounts payable, I want an OK. And then a statement of cash flow. If you don't do the OKs, that's fine. The payments for merchandise then would be $94,560. Now, make sure you put this in as a minus. I had equal in there, but that's okay. You want that as a minus sign because you want that negative. I usually cell reference everything, but I'm trying not to. Okay. So that's on the income statement. And then we don't worry about totals because that's sort of taken care of. Selling expenses are next, 24,260. Okay, so we have 24,260. That takes care of the selling expenses. Now we look down here, the additional information. There was something we had down here. Number 3, depreciation expense was included in the selling expenses of $8,400. Well, depreciation expense does not require any cash going out, so we want to subtract it off. So the cash that went out would be $15,860. Okay, so we have up here then, statement of cash flows, a negative 18,000, negative 15,860. There we go, negative 15,860. Okay, now for this income statement, we have next one is the general administrative expenses. Okay, that's 34,600, so we put that over here. And we want to run the prepaid rents through there. Okay, so in the prepaid rent category, we have 3,000 and 1,500 for the ending. That takes care of that one. And difference of 1,500, and since it went down, we did not replace it. So we paid out less. Some of the expenses are going to be overstated, so we would subtract it off. Plus 1,500, so we actually paid out 33,100. Because that's what we're trying to find on this, is how much cash did we actually pay out. So it's negative 33,100. And then on the, here we go. So that's total operating expenses. That's a total. We don't worry about that one. Operating income is a total. Interest expense, that's our next one. 12,290. Okay, so over here then we have 12,290. And we run that through the payables. Okay, so we have, that's okay there. And we come down here to the payables. Interest payable. It's 2,000 and 3,000. Okay, so we have 2,000 and 3,000. A difference of 1,000. Since the payables went up, we paid out less than what we have in there, than what we have in expense. So that would be subtracted off. So we paid out 11,290. So the statement of cash flows, we would have negative 11,290. Then we go to the next one, which is the income tax. Okay, because that's income before taxes, that's a total. Income tax is 6,200. Okay, so we come down over here, we have 6,200. And then we look at our beginning income tax, which is 8,000. Ending is 6,000. Ending is, try that again, 5,500. There we go. That's that one right there. So that's okay now. And that's a difference of 2,500. And that's added to what we have before because payables went down. And since payables go down, you paid more than what you have reported as the expense. So that would be a negative 8,700. And then what you'll do on these is add this up, equal, you can hit the summation button, but I'll do this because I have it set up as a spreadsheet or as a half sheet. It's harder to find. So the cash flow, net cash provided by operating activities was 11,590, yes. And now I have used here because that'd be, if this was negative, it would be used. But this is the operating activities is what we're doing here. Okay. So we'll quit there. That's the operating activities. In the next video, we'll do the same thing, only this time we're going to do the indirect method.